The professional's edge. Why Forex trading is the ultimate test of character. The dream is undeniably powerful. The vision of trading the global markets, achieving true financial independence, and generating wealth from a laptop anywhere in the world is one of the most appealing pursuits in modern finance. But if the concept is so simple, buy low, sell high, why is this statistical reality so grim? Why is it that the vast majority of people who enter the Forex market walk away within their first year? Today, I want to pull back the curtain on the psychological and operational barriers that make trading one of the most difficult ventures you will ever undertake, and how you can navigate them to actually survive. Point 1. The poison of the get-rich-quick delusion. It all starts with the internal narrative. Most people enter the Forex space with a lottery ticket mentality. They are fed visions of overnight millions, luxury cars, and instant success. This is the first and most dangerous hurdle. When you start with a get-rich-quick mindset, you aren't trading, you are gambling. When the cold reality of the market hits, when those first inevitable losses occur, that fragile dream shatters. New traders quickly realize that extracting money from the market is significantly harder than a social media ad suggested. Most quit right here, failing to realize that the boring path of slow, consistent growth is the only one that actually leads to wealth. Point 2. The emotional shock of financial loss. This leads us to a hard truth. Everyone wants the profit, but almost no one is prepared for the loss. Most people have never truly sat with the feeling of watching their hard-earned capital evaporate in a matter of seconds due to a bad decision or a volatile news event. Because they haven't mentally prepared for the cost of doing business, they suffer a total emotional breakdown when a loss occurs. They take it personally. They feel the market is out to get them. Out of fear or frustration, they abandon their strategy or give up entirely, concluding that investing isn't for everyone. In reality, they simply weren't mentally armored for the battlefield. 3. The substitute for experience, seat time. There is a dangerous tendency to try and rush the professional maturation process. You cannot build a skyscraper on a foundation of sand. If you're just starting, you must respect the seat time required to understand market nuances. I advocate for a disciplined two-phase approach. Phase 1. The 6-month demo. This is where you learn the mechanics, the platform, and your strategy without the weight of emotional distress. Phase 2. The 6-month micro account. Transition to a live account, but trade the smallest possible lots. This allows you to test your psychological response to real risk without blowing your life savings. Education is the map, but the micro lot experience is the actual journey. You need to feel the market's heartbeat before you try to outrun it. Point 4. Transitioning to the investor mindset. To succeed, you must undergo a fundamental shift from a worker mindset to an investor mindset. In a traditional 9 to -5 job, there is a direct correlation between hours spent and dollars earned. Trading is the opposite. In Forex, you don't get paid for doing work. You get paid for waiting for opportunity. Some days, the most profitable decision you can make is to keep your hands off the keyboard. You must develop the patience to wait for your specific setup to appear. The irony is that while you might wait 3 days for one high-probability trade, that single execution can yield more profit than an entire month of labor at a standard job. 5. Defining your identity and finding your edge. You cannot trade someone else's personality. You need to spend time discovering who you are as a participant in this market. Are you a high-frequency scalper, or does your temperament suit long-term swing trading? What is your actual risk tolerance when things go south? There are no shortcuts to self-discovery. You must trade, meticulously record every single entry and exit, and analyze the resulting data. This process is how you find your edge. That statistical advantage that ensures over a sample size of 100 trades, you come out on top. If you aren't tracking your data, you aren't trading. You are just guessing. Point 6. The trap of undercapitalization. Many traders are doomed before they place their first trade because they are undercapitalized. They start with a tiny account and set unrealistic expectations for high returns to pay their bills. This desperation leads to over-leveraging, taking on too much risk for the account size. You must learn to separate your trading strategy from your money management. Your strategy tells you when to trade. Your money management tells you how much to risk. Most accounts don't blow up because the strategy failed. They blow up because the risk management was non-existent. 7. The final barrier: discipline and execution. Let's assume you've done the work. You have the knowledge, the strategy, and the experience. Now you face the ultimate boss: execution. This is where the majority of even educated traders fail. They cannot follow their own rules. They jump into trades early because of FOMO, fear of missing out, or they let a losing trade run because they are too proud to admit they were wrong. A world-class trading plan is worth zero if you don't have the discipline to execute it like a machine, regardless of how you feel in the moment. Point 8. Analyzing the mirror, not just the chart. While we spend hours analyzing candle patterns and economic indicators, it is equally vital that we analyze ourselves. It will reflect your greed, your impatience, and your insecurities back at you with painful clarity. Most traders ignore the internal work, but it is the most crucial component. Keeping a detailed trading journal that records not just the what, the numbers, but the why, your emotions during the trade, is the only way to improve your decision-making over time. Conclusion: trade to live. Finally, keep your perspective. It is easy to become obsessed, glued to the charts 24 hours a day, losing sleep over every pip. But remember, we trade to make money so that we can enjoy our lives, not so the market can consume our lives. Find a balance, love the craft, respect the risk, and maintain your discipline. If you can master yourself, you can eventually master the market. Good luck on your journey to finding your edge.